Good morning, SMF Street Traders. We are going to be talking about the earnings season Q4 kickoff. Earnings Q4 for the quarter coming up in October 4th. And we're going to, instead of starting off with Alcoa, folks, it's different. They changed the calendar, put Mosaic there, and put Alcoa down here on a Thursday. Why did they do that? Because Alcoa, when it starts off the earnings season, generally misses its earnings and gives a big gap down in the markets the next day. So they conveniently, once again, and gimmickly put the one that causes the most trouble at the later end of the week, and that would be Alcoa. So basically, there's been changes in the calendar. Mosaic, on the other hand, well, let's talk about, before we get into the names, let's talk about the general overview, SMF Street MMTs. The last 6 quarterly earnings is when we were put in the bottom of the earnings and the estimates were dropped dramatically by analysts. Because when the markets in 2007, around that June period, but more so before 2008 even started, we even said at that time that the S&P earnings were at about $100 and some odd per share, way up at the highs, and that those S&P earnings at the time, the way that we seen 2008, would be about $55 to $60 at a wholesale price to earnings, considering that the S&P 500 earnings, 40% of the value of those earnings come out of the foreign different countries, emerging markets around the world for services manufactured and sold. So basically what I'm going to tell people is that we would hit the high trough level in the last quarter, Q3, that the earnings would still be robust. But then again, it was time to sell the news when we did the kickoff. And all of you SMF MMTs and people worldwide that were involved in that, they popped them and they sold them. And the good news, like Intel with the best quarter in 40 years, we were shorting that one. And after hours, around 22.50, 22.60 on the spike. So anything that had spiked with the good news, it was time to take a profit. And, of course, when everyone else was barreling in, they couldn't figure out, man, that was the best quarter ever. Why is the stock down? And why is lots of stocks at that particular time, during that particular mechanical event, execution event, was understanding where the sentiment would be and what the trade to that sentiment would be, and as to the value of where that news was priced in to that particularly publicly traded company given its report. And that is why, by the rumor, it comes out, the news is good, but then we need to drop $2 or $3 and shake out buyers during earnings season. Now, based on the lower GDP growth that we had called for, and we have that on our home page, I mean, not on the home page, but it's on our website there. You can go to YouTube channel. Type in stockmarketplenty.com. Go find that we had taken down the forecast, which means that at current price levels, looking forward, with the amount of uncertainty with the unemployment rate structure and some of the previous videos that were done before this earnings video today, was the economic indicators that are going to be coming out. Now, granted, that corporate of America has leveraged itself at your expense. And they were at the brinks in the financial crisis, and they were on their knees. And their market capitalizations have plunged in value during that year 2008, which gave U.S. corporations and publicly traded corporations, when their market cap drops in such a great value, well, guess what happens? They have less leverage or monies that they can borrow on, because their stock valuation was at all-time lows, and their market capitalization was at all-time lows. So basically, since that 18-month cycle in the earnings in corporate of America in general have re-leveraged, but there's one thing that corporate of America has not done good for you. Yes, they're out of the bag. They're doing well, because they are. They leverage their product. But guess what they haven't done for you, Main Street? They haven't hired you. And basically they have not. And that's because there are so many problems within our capital structure system in the USA that I can guarantee you this unemployment rate could go much higher. Temporary unemployment to them instead of your full employment, which is to give you the comfort of your life, of what kind of service and your commitment to one of these publicly traded companies that you may work for. But where are some of the bigger corporations making their profit margins? They're making their profit margins because their productivity labor is at a much lower rate cost by having someone in China or Malaysia or India or wherever do their work, because in order for them to keep beating these bottom and top line growth is that in some of the sectors and some of the companies is they're able to put up some pretty decent numbers. One of the things, the key thing and the key event that we're going to be talking about is the actual event that will occur within the beginning cycle, because we have elections coming out and we've got lots of things. But on the conference calls is we're going to be keying in on key Pacific margins. Okay? We're going to be keying in on R&D capital expenditures. One of the things that we're going to be looking at in a lot of these earning calls that MMTs are taught to sit on and listen to the analyst during their Q&A, and what to listen for and what not, they'll be assigned to certain ones to listen to the call. Then during your training, the key Pacific subjects that I tell you to listen for is what you're going to listen for. Then basically what we're going to be looking for in there is we're going to look to see if the growth rate of this last quarter, that's where the slowdown started now. That's the previous 3 months. During that summertime when the markets were having a lot of problem, we had China that everyone was scared to death that they were going to be real weak, and that their PMI came out at 53.75, I think it was, on this Friday. And basically, because it wasn't contracting any further, things looked good and we had a little bit of a rally, but then they still sold into them. And each one of these companies, SMF Street does cover Costco. We do cover Monsanto. We do cover Yum Brands, because it's very important to tell us, Yum Brands, they do a lot of business outside of the USA. Wolverine as well, to know, are we going to make a Mosaic, which has been just hammered down and has some problems lately, but it is a buyout target. But really the other one that you really want to look for that's really having a much bigger problem than Mosaic is that Monsanto. They're going to use that one there, and we cover this one as well. And basically we're going to take a look at what they really truly have to say around the world as to what they're shipping, what their cost structures are, the kind of money that they're pulling in. The other key ingredient, SMF Street traders, is in this particular training module. It's called Earning Season Module. And it doesn't mean that you're going to trade them, but the things that you want to look out is what key Pacific sectors of the amount of revenues, it's the amount of revenues, U.S. revenues versus different regional, global regional revenues. And when we look at these things, we're going to be looking at what that was compared to U.S. Why is that, SMF Street? Because, once again, you want to know where the U.S. community is and the U.S. economic cycle and the U.S. consumer. But you have to have a model to be able to separate, and a way to calculate, and a way to look at. So, U.S. revenues versus global revenues. That's going to be another key thing. Another key thing is on each one of these earnings report, and remember, this is a very light week. We are going to get into a tremendous big week the following week, and I will be happy to show you here momentarily. The second week, SMF Street Traders, is going to be the 11th of October through the 15th with an options expiration week. And we're going to take a look at where we start getting up. Now, Intel has already came out and warned. Let's talk about Intel. What did Intel do? They beat quarterly after quarter after quarter. They launched their new product cycle of chip cycles. They did extremely well. And they even had record-breaking quarters. And you can see, 50 cents, a year ago was 33 cents, and you can see that their revenues were up there at their level that they should be. One of the things I'm going to tell you is that after each quarter they were given upside guidance, including the last quarter, SMF Street, they gave that upside guidance. And they said how wonderful it's going to be. But ironically enough, SMF Street, they came back out a few weeks later or a month later or whatever it was there, and they guided down their upgraded estimates. So basically what I want people and MMTs to understand, they can't live up to it. During the last 6 quarters, lots of companies have performed extremely well from the bottom trough to the current high trough of that July quarter. This is going to be the first beginning quarter of a new earnings cycle that will go 18 months out from this very date in our longer structured plan. We've got to the medium part of that 18-month earnings cycle, which is 6 quarters. That's called a SMF Street 6-pack. And half of a 6-pack, well, is 3 quarters.